Joined by Amrita Sen, commodities analyst at Barclays Capital, and from Vienna, Schenker, the president of Prestige Economics. So Jason, let me start with you. Are you expecting anything from this meeting today?
Well, I'm not expecting a lot. In general, I think what we're going to see is hopefully a communique from the group to reassure the markets. But in terms of production, I think you're likely to see them shy away from numbers or any kind of hint around those sorts of things.
Amrita, it was acrimonious last time. Are they going to be trying to paper over those cracks, or are those real divisions within OPEC still there?
I think those divisions are still there. The heavyweight Saudi Arabia and Iran, they clearly don't see eye to eye. But I do think that they will try and at least put on some sort of an agreement. They're producing well above quotas anyway, so ratcheting up the quotas to bring it in line with production doesn't change anything. The question really is, how do they accommodate Libya over here?
Well, let me just ask that question to you back. How do they accommodate Libya? What difference is that going to make?
I think ultimately, I still think at the moment, given the general unrest in the region, all the countries require much higher prices to break even on their budgets. If that's the case, and say Libya comes back on a sustainable basis very, very quickly, I would think Saudis will start to cut back a bit, because ultimately they still want the prices to be around current levels.
Jason, when we talk about quotas, are they really any worth talking about at all? They all break them, don't they?
Well, they do, and actually individual country quotas have now been suspended for a number of meetings, and the group quota was officially more or less suspended at the last meeting. I think there's a very important thing here about what's going on and what I'm hearing from people inside the groups that are here at the meeting, and that's really that Iran's coming in showing some more conciliatory tones in the way that they're approaching the meeting, and I think you are going to see a communique out of the meeting. I think you are going to see that although Saudi Arabia and Iran and Venezuela and a number of the other countries are not on the same side of the table, I think what you are going to see is a move forward with the group towards some kind of a unified statement, simply because those downside risks have become very pronounced. And they're going to try to say something as a unified group, even if it's not a quota number, which may or may not have as much relevance as the actual production.
Jason, what are those major downside risks? Europe, of course, but how worried are they about China?
Well, I think in general they have a lot to be worried about with China, with Europe, with most of the global economy in general. If we look now at financial markets, if you look at equities, if you look at oil prices, if you look at metals prices, a lot of the downside risk to growth, the deceleration of growth that we're seeing right now, is not being priced in. And even though right now oil for Brent's well over $100, you could see a very sharp spike lower at some point in the next couple of months as the story of decelerating growth globally becomes a story not of slowdown, but potentially becomes radicalized and becomes a story of return to recession. I don't expect a return to recession, but when that story gets bigger, as that becomes a plausible scenario, these prices could move lower, and the OPEC members are very cognizant of that downside economic risk from China, from Europe, from everywhere.
Amrita, let me just pick that thought up with you, because when you look at the oil price and the oil markets, they do seem to be acting somewhat independently from the other markets. Every day we talk about recession in Europe, slowdown in India, slowdown in China, yet it's still around $100 a barrel. Why?
No, I think it's a great question. I think that has been the story for oil this year. I think demand actually hasn't fallen nearly to the same extent as what the global economy would say that it has fallen. Chinese numbers yesterday came out ridiculously strong, right? So generally the structural bits of oil demand are still holding up well, but this year really has been about supply underperformance. Non-OPEC supply, lots of problems in North Sea. Libya, of course, it's coming back now, but we didn't have Libyan crude for a good 6 to 7 months. So obviously that tightened up the balances. And I think generally in the last OPEC meeting going into that, market balances were very, very tight. I would say this OPEC meeting market balances are not as tight, and I think the group as a whole are much more cognizant about the downside, and they would protect that. Despite oil prices being so stable, geopolitical risks are significantly higher today, but nonetheless I think market fundamental-wise, supply is a bit better, demand is a bit slower, so I think things are changing slightly.
Jason Schenker, Prestige Economics out there in Vienna, what role of speculators? You've got the OPEC boss saying they are playing a key role in keeping the oil price high, yet you've got the boss of the IEA saying, no, they're not.
Well, you know, who's affecting price? I think OPEC isn't really what's keeping the price elevated right now. They've been, really, the Saudis have went against the group, didn't have a unified statement back when we met here in June. You know, they're trying to crank as much production they have throughout the year, but that Libyan deficit had a real problem, and the product market is, I think, what's also keeping that crude price elevated. If you look at distillates, you look at the demand there, the supply is really tight, demand is very high, and even now, we still see strong demand, but it's going to be a deceleration of demand increases as you see that Libyan production come up. So you've got supply going up as the rate of increase of demand is slowing. And so that's really what's kept prices high, is that demand is already still high. The question is, what happens in the next couple quarters? In general, how high are prices right now? We still see that a forecast for next year, we're predicting $103 a barrel for Brent for the average for the year. But again, there's downside risk, and that's what OPEC's going to try to fight against. That's where they're most effective in keeping that price higher when there is downside risk.
Amrita, the spread between crude and Brent is ever narrowing. Why is that now? And do you think we'll soon reach parity on that?
No, I think there's some way to go for that, because basically the reversal of the Seaway pipeline kind of took the market by surprise to a certain extent and cleared that misconception that Cushing is landlocked. So that really helped the perception that, okay, the crude can come into Cushing, but Cushing's not going to fill up, Cushing being the delivery point of WTI. However, given how quickly North American production is rising, you still need rail to move crude around. And as long as you need rail, that spread kind of needs to be around $8 to $12. And that's where it's stabilized at the moment.
Okay, very final thought from you. 6 months' time, price of crude.
I'd say fairly range-bound. I think on the downside, you've got the geopolitical support. On the upside, it's still the macro noises that's coming through. So I don't see much change in flat prices.
Jason, very, very quickly, price of crude, 6 months' time?
Well, we see, as I say, Brent, average price of crude in the coming year, $103 a barrel. Real downside risk in the next, say, 3 months, as the deceleration story could become a bigger deal.
Jason Schenker, Prestige Economics in Vienna, and Amrita Sen, commodities analyst with Barclays. Thank you very much indeed to both of you.